I want to bring in Charlie Gasparino, who's upstairs in the newsroom. He's talking to his sources. We also have Jeff Sica of Circle Square Investments, Art Hogan as well of B. Riley, FBR, Chief Market Strategist. Charlie Gasparino, what are your sources saying first?
Listen, you know what they tell me? They say stop covering every little jitter in the market. I'm telling you.
What do they want us to ignore it?
I know. I got that. But when you talk to professional traders and investors, and I say, okay, why is this going down 500 points? Or it's actually down 600 points now, over 600. They're like, Charlie, the markets, they go up, they go down. The professionals, I don't think, are freaking out. And here's one thing I would say. Let's not overanalyze today's puke. And this is a puke, okay?
Oh, that lovely, classy word.
You love that classy word of mine. We have higher interest rates, which are expected. We have unwinding of the Fed's balance sheet, which is expected. We have certain macroeconomic trends that are getting better, meaning marginally higher inflation because employment's going up, the old Phillips curve thing there kicking in. Markets will correct on some of that stuff based on those factors. The real question is, I think, long-term, if you're an investor, do we get in a trade war? It doesn't look like Trump is really pulling that trigger totally. Although I will tell you this, I've been covering Tesla for the last couple of weeks, and you could see it and so I know what GM and Ford's doing. They're having a hard time, a much more difficult time because of rising commodities prices. So it's starting to have some impact on the automakers.
Yeah, Tesla's down about 2.25%. But did you see what the Chinese finance ministry said today? They were optimistic, Charlie, on a trade war breakthrough. I would have thought that a comment like that would have spiked this market. We do not see that. We're down 607
Liz,
points.
It's like the boy who cried wolf. We keep saying there's going to be a breakthrough, and it's not happening. So you trade off of other factors, and I can't imagine that any one of your guests are going to say you should be hitting the panic button on this thing today. It strikes me as, listen, we're going to get corporate earnings coming in pretty soon. They should be pretty good. Unless you believe corporate earnings are falling off the cliff, stocks generally go up with higher corporate earnings.
Jeff Sica, do you believe that? I agree with Charlie. I think that corporate earnings, at least this quarter, they may moderate a bit in the next quarter, but I would imagine they'd be pretty solid here. What are you looking at?
Well, I mean, the first thing we have to look at is we have to consider the fact that who is at the party. And you have a lot of people that have been in this market for the last 9 years that have seen this massive amount of appreciation, that really were starved out of the bond market, and they found their way into the stock market as a way to participate in some sort of dividend income paying security. And now they're experiencing what I would consider a very minor amount of volatility when it comes down to it, percentage wise. So those investors, it's a toss-up of how they're going to act. They're not used to volatility. They're used to buying on the dip. They're used to these surges that we have a lot of times when we get major sell-offs. But I agree with Charlie. There are some problems on the horizon, namely to do with the trade war, the potential trade war, that could derail any rally. When you have a market that 50% of the gains in the S&P 500 in the past year and a half or so have come from basically 5 stocks, you can't really trust that market completely.
Art Hogan, I think that's an excellent point in that regard, but there are some other winners there. It's just that today people continue to focus on the fact that, yes, tech is getting hammered. The transports, I do not want to forget the transports. They are also down. We do have some S&P leaders here. J.M. Smucker, General Mills, Kohl's, Public Service Enterprises, and Campbell's Soup as we head into the fall. But where are the big program trades? At certain points, shouldn't we be seeing the high-frequency guys seeing an opportunity as the Dow falls 600 or so points?
Yeah, Liz, you bring up a really interesting point here. When you think about what happens in October, there's 3 things. First, we get ready for the earnings reporting season, and there's some caution about that because we think both the strong dollar and trade and tariff is going to adversely affect guidance. I think that's true. We've seen that in a couple of instances. I think the second thing is you have a blackout period for company buybacks. So one of the large buyers in the market's not there today. Any other given day where we had a 1% or 2% move in the market, you're going to see buyers come in, at least at some point to attempt a rally. We saw none of that today. I think a lot of that has to do with the fact that we're in quiet period for the buybacks. think the third thing to remember is we thought after we got NAFTA 2.0 accomplished, we'd pivot right to China and get something accomplished.
Did not happen.
The rhetoric around China has gotten worse, not better. We're calling them, spies. We're calling them cheaters. We're calling, all sorts of things where the rhetoric is escalating, not getting better. And I think the market had anticipated a smooth glide path around into the end of the year. And I think it's next year's business. I think that's a concern in the market, probably the largest concern we have.
Okay. Charlie, I just need to point out a couple of things. We're now off the floor by, I want to say, nearly 80 points. So we're now down 568.
Because of you.
I'm trying to see the silver lining here. It's like, yeah, all because of me. But at what point do you know your guys, the people whom you speak with in these sources, are they getting in elbow deep into buying some of these names?
No, not yet. They'll wait a little bit more. I mean, I think, there's some, profit taking going on here. I mean, and there is something interesting going on. I mean, if you talk to average people, why, if they can get 3.5% on a 10-year, maybe that's better than risking your money in a stock. Some people think that way, even though it's 3.5%. Doesn't sound like a lot. So there's some of this. This is natural, and it's going to happen more. I would just say the big things looking at the horizon again, trade war, and one other thing that kind of strikes me is if the Trump tax cuts, which were a massive corporate tax cut, if those things don't produce the bang for the buck in terms of GDP growth, consistently and long term, we're going to have much higher deficits in the face of rising interest rates and an unwind of the Fed balance sheet. Then that starts getting really critical. But those are the two major factors. Mm-hmm. The fact that we have some higher interest rates now, I mean, it's good. Again, read up on the Phillips curve. When you have some inflation, you do get unemployment goes the opposite direction often. Higher interest rates is generally better for retirees. I mean, there's a lot of positives here.